Hello, my name is Steve Bigelow with the Candlestick Forum. Get a lot of questions about how can we make money when the market's going down? And that's relatively easy. That basically is utilizing the information that is found in the candlestick charts that tell you the direction of the market. So obviously, again, we call observe the obvious. When you have all the indicators on your chart showing that there's a change of direction, like bearish signals in the overbought condition at major moving averages or resistance levels everybody else is watching, or your bearish J-hook pattern where we can analyze or assess what this wave is likely to be based upon the magnitude of this wave. Then we can also look at what a candlestick investor should be looking at when the markets are in these conditions. We're in the oversold area. Wave 3 is getting to be about the same length as wave 1. And remember our T-line rule. The further away you move from the T-line, the higher the probability it's going to come back up and test it. Now, does today's trading indicate there's any change of investor sentiment? Not really. We're in the oversold area, but as you can see, you can stay in an overbought area for quite a while. You can stay in an oversold area. However, you want to be a little bit more attuned to the fact that everything's setting up for a possible, not necessarily a reversal, but maybe a bounce for a couple of days back up to the T-line. So the rhetorical question is this an inverted hammer signal? Well, it could be, but that would again be based on how we see the market indexes open tomorrow. If it opened positive, that'd be a good indication there is a bounce. If it opens lower, now we've got a bearish doji sandwich continuing this downtrend. So every part of a trend can be dissected much more accurately by knowing what should happen after candlestick signals and where you are compared to the T-line. Now, what we want to look for are the patterns that are obviously showing a deterioration of bullish sentiment. And remember what happens to investor sentiment. The more it keeps selling off, the more the probability you get big, huge moves to the downside. Does that happen every single time? Definitely not. But you're always putting yourself in situations where the probabilities are much greater that you're going to be not only going in the right direction, but have the probability of being in something like a big move to the downside. So anytime we see these patterns, look what PayPal is doing. That slow curve, there was your doji yesterday. If it traded lower today, which it did, you could be shorting it because now you got a bearish doji sandwich. And what's the expectation of a bearish doji sandwich? More downside. Same scenario here on Peloton. Kind of the rounding top, you have a doji sandwich sitting right here at the resistance levels. If it trades lower, what's it telling you? Doji sandwich says more downside. Your stochastics heading down, and this area being breached tells you you're now into wave 3. So anything we analyze on a candlestick chart is based upon what are the signals and the patterns in combination telling us where we're dramatically improving the probability of being in a correct trade. So if we can see a dumpling top, what is our expectation from a dumpling top? A strong move to the downside. What instigates that strong move to the downside? They were gapping it down. They traded it positive today. However, this is a very clear indication of how to use candlestick signals. Where is your ultimate entry point? Well, if they come back down through today's open and tomorrow's trading, what's that confirming? Confirming this dumpling top. So you can make a lot of money knowing the direction of a trend or a price move based upon correlating with the market trend. So obviously, a lot of bear trades are going to work in a bearish market. But a lot of people say, well, if we're not comfortable with buying or shorting stock or buying puts or buying put spreads, how can we make money in this market? Well, there's some short funds that you can be buying, that when the market's going down, these go up. So there's always an opportunity, and they all relate to the same visual analysis. You can see this is your classic pattern, fry pan bottom, J-hook pattern. So you don't have to be shorting the market. You can be buying the short funds and making money. So right now, again, observe the obvious. We're in a downtrend. We're moving a little bit away from the T line, so we're a little bit cautious. But until we see a reversal signal that tells us we might be bouncing, you pretty much want to stay predominantly short. That'll be it. We'll see you in the chat rooms.